Ladies and gentlemen, Kate here with the Traders Club. Welcome to the market update. Today, let's kind of follow up with what we've been talking about the last couple of weeks. Let's stick with Spider, Diamond, and the Qs, and we'll call it a day. Hope you guys had a good week and good weekend so far. And Thanksgiving week is coming next week, so we will have a Wednesday is. Thursday is a Thanksgiving day. Obviously, market will be closed. Friday, I think, half day. Is it true? Friday, 23rd is half day, so that's the schedule there. Before we get into it, I want to go to this is my website. If you go to twotradersclub.com, you'll see this intro page there. Just hit on the analysis, market analysis there, and then you go to this page, and then my most recent blog post here, Spider analysis, and I want to talk about it. So obviously you can go ahead and read that more in detail, but what I wanted to talk about is some of these charts here. As you can see, this is Spider daily chart here going back to 2009, right? So 2009, and you can see, just looking at things more of a longer term, so then you can have to focus on what's going on in the major primary term, so where the tide is moving. I mean, the minor to intermediate term perspective, we've been seeing some volatility, but let's see where we're at. Let's see what the sentiment is like right now. Obviously, in the streets there is a lot of fear, right? And there's a lot of people calling for a crash, and that's no different. There's always, every single pullback, there's somebody somewhere. It doesn't matter who, it doesn't matter how many followers they have, it doesn't matter if they're really well known, doesn't matter if they're billionaires, somebody somewhere calling for the crash. As you can see here, it was no different back in 2010. It was no different in 2012. Actually, in 2012, this is a true story, and then I don't know if you can still find the clip. I don't know who this guy was, but he came on news or something like that, and he said a Spider is going to go to 60. So S&P going to 600. I swear to God, yes, that's what people were saying back then. And then you can see what happened ever since then. And then all throughout this move, so many people are calling for a crash. This keep going down. This is known as the most hated bull market ever in history. And then basically what we're trying to do here is that this is a rising 200 SMA, right? You see that pink moving average. And there are three occurrences where it stayed below it for a little bit, right? And including today, this is a fourth occurrence, and this is a third time here, second time here, first time there. So as you can see, it stayed there a little bit, and then market rebound higher, and so now we're below it because a lot of people are talking about, well, we're below 200 SMA. There is a very, very warning, cautionary signal, and the same people said the same thing back in 2016, back in 2012, back in 2010. You know what I mean? And I know what many bears are gonna say right at this moment as I show you this chart. They're going to say, this time's different, okay? It's gonna be different this time. Oh yeah? Is that what you tell yourself every single day when you get in your car? You'll be like, well, this time's gonna be different. I'm gonna have a car accident. Right? This is what you tell yourself when you get in an airplane, that this time is going to be different. None of us say that in the real world. We understand that what has been, that's what will be. We understand the probability aspect of it. That's why we get into a car, understanding we have a high probability of not getting a car accident. None of us live our life, well, this time is going to be different. I'm going to get in a car accident. I'm so fearful. I'm so depressed. I'm so sad. None of us live like that. None of us go into the airplane thinking that way because we understand the probability, right? And that's kind of what I'm trying to do here in this chart, that as you see, the probability, because as you can see, below 200 SMA, it was there to really shake the people, to impute fear in traders and investors' mind, and to shake some people out. Keep in mind, 90-95% of traders and investors are very, very fearful, like they always do in every pullback. But isn't that ironic that we all know the market doesn't go straight up, but it is interesting that on every freaking pullback, there's always somebody somewhere freaking out. right? And we know that more nowadays, more so because of the prevalent aspect of social media, right? So you see a lot of these traders are tweeting things out, writing blog posts. They come on Yahoo Finance or, you know what I mean, CNBC, Bloomberg, whatever. They come and then they say things, you know. And this is why I look at this and I want to get a good idea of what the real sentiment is currently, what the chart is telling me, right? So I'm not saying that it's 100% guaranteed thing that we're going to bounce from here, because nothing is guaranteed. I mean, can you guarantee me that you're not going to get sick tonight? I mean, there's nothing guaranteed in the world. What we're trying to do here is looking at the past price action to try to forecast the future price action, right? With the probability, statistical probability, because I mean that's all we have. I mean that's what this whole the world was created, right? With that in mind, right? But anyway, so looking at this here, so we got 4 occurrences below 200 SMA, and every occurrence became a bottoming signal. It didn't become a bear market. It didn't become, you know, a recession or anything like that. Again, looking at this a 10-year span here. But what gets, I think, as far as the price action is concerned, the duration of that has been below the 200 SMA. It looks a lot like. You know, it looks a lot like 2010. That's why I put an arrow there, and let's zoom into it. So when you zoom into 2010 and today, you can see that that's what we're seeing here, right? You can see that we got the left shoulder, head, right shoulder, right? We came down and we started building this base here, and so that's what we call inverted head and shoulder formation, and that's kind of what we're seeing today here, right? So that's kind of what I was pointing out here in this chart, that here and that looks similar, and that's kind of what we're seeing, something similar in that perspective. Market did gain about 20% after 5 months later, after it has fully confirmed by clearing above the neckline and advancing above it. So that's kind of what we're looking at here. I think 280 is going to be an important level, and this is something that I tweeted out back in late October. This was when there's truly the biggest panic in the market, was when market was trading at 265. And you can see that this is what you call prior resistance becomes new support. And this is what I call rising pivot, right? So it was a resistance before, now becoming a support, right? You can see right here, trend is assumed to be in effect until it gives us a clear signal that it has been reversed. And that's from Charles Dow, one of the Dow theory that suggests that, right? And he said that back in early 1900s. Going back to it here, looking at the today's price action, so that's kind of, we're seeing that. And I haven't changed anything on this chart, so let's do a little bit of maintenance here. So from last time we talked about these 2 gaps. Well, unfortunately, all of those gaps are filled. And the good news about this, something that I talked about the last time, is that those gaps are going to provide certain cushion, right? So this gap, we just blew right through it, right? And so then bears are mad, they just bring it down, and then we also fill this gap here, and that's when bears got exhausted in the short term. This is why the gaps are a good thing, because gaps provide that cushion. Same thing happened in the past, as you can see. Do you see this gap right here? Do you see that gap was open, got up here, and bears came down, filled that gap, that provided cushion here. Same thing happened here. You see this gap. You see that gap. We got up here, pulled back, we filled that gap, provided cushion, and got up here. And that's how this uptrend was started. So I think it's a good news that we already talked about that inverted head and shoulder formation. We talked about, you know, the index being below 200 SMA last, you know, since 2010. And then we talked about the rising pivot along with this minor term, these gaps being a cushion here. And you can see that we saw the bullish piercing candle on Thursday, and that's this candle right here. You can see that it basically gapped lower, and then it closed above 50% body of previous day's candle. That's the bullish piercing, and then we're just right at it. So for the bullish piercing to confirm, we need to get above 274.61-ish or so. If I actually throw a little bit of Fibonacci here, just for the minor term level, so you can see that that last level of fib was coinciding with the gap fill level, and that was a level that bulls wanted to protect for this left shoulder head and the right shoulder cultivation to happen. So that's kind of where we're at. And obviously we still got the 100 SMA here, we got the 50 MA still actually declining as of today. And so we are still kind of working with a bearish sentiment overall in the minor to intermediate term. But obviously looking at things, you know, in this price action, you can see that we're slowing down, the selling pressure slowing down, potentially a bottoming signal with that inverted head and shoulder formation. This possibly a right shoulder, possibly a higher low. And if that's the case, if this thing gets up and then pull back and we start to do something like this, and that's the first time you will see this thing cultivating higher high and a higher low there. So 281 will be very, very important level. We got a little bit of gap here. That's going to make things a little bit hectic for the bulls. We got this tiny gap here. So those gap areas going to make things a little bit hectic at 275, 278-ish. So I think if the market does continue higher next week in a Thanksgiving week, I think we're going to get up here. I'm going to start to stall here. And then we only got 3 days, Monday, Tuesday, Wednesday, and then Friday, I'm thinking is half day. Might be mistaken, but so I think we're gonna staying around below 281, and then next week we'll see maybe the resolution of that, unless we see this thing going up and just gapping it up above this gap to make it pain-free for the bulls. So we'll see, and you know, we'll see how that plays out next week, and I'll report to you guys if anything develops. Right? Let's look at Diamond as well. Diamond, same thing here from last week. I haven't changed this chart yet, so let's do a little maintenance here. So that gap has been filled, and then this gap also filled. So that those two gaps were there for cushion. It has been deployed by the bulls. So then if we do see some shenanigan like that, you can see bulls were able to find some, you know, took advantage of that situation where bears were a little bit vulnerable. They really brought it down, but these two cushions slowed it down. The second gap got filled. Bulls brought it up here. We'll also have a you know, 3-day bullish piercing candle here. It needs to get above 255.14 for that to happen. Actually, Dow Jones is actually a little bit more bullish sentiment because we actually already cultivated higher high here. So we got the low, and this is higher low. So you can see we're already kind of potentially be doing this, where this is starting to try to cultivate the higher lows and higher highs there. So let's see how that plays out next week as well. Let's go to Qs. And Q's a little bit more vulnerable. We talked about this last week because we got a lower high, right? Spider equal highs, Diamond higher highs, Q's lower highs. And it's no surprise to see that because obviously, you know, these large tech stocks been coming down. NVDA is almost down 50%. Facebook same way. Google's down. Amazon's down. Netflix is down. Apple's down as well. I do think that Apple's a buy though at some of those levels that we're looking at today. And with that, Q's been it's been weighing down Q's, so that you can see how Q's looks most vulnerable as far as the chart is concerned. We got these two gaps here. Again, these two gaps are going to make things hectic. But you know, nonetheless, we are still in the vicinity of potentially a higher low. But it's you know, the 50 MA is really falling lower. So I think Q is gonna kind of take some time until some of those large tech stocks to kind of, you know, stabilize itself. This is the reason why I've been saying that I have none of those stocks in my portfolio. None of those stocks were in my portfolio. I've been saying that pretty much all throughout this year, because I'm not gonna buy something that's been, you know what I mean? Like, let's just go there real quick. Like NVIDIA, you know, you go to monthly chart and you can really see it. And something, I talked about this before, like, why the hell do you want to go long up here? I don't understand. You know, it's like, even if it keeps going higher, it's very, very vulnerable to, you know, go long at that level. And as you know, that best time would have been, maybe somewhere here, like when this was a grinding, maybe about, you know, look and see, this was about 10 years or so like that. It's just been building a base. And the best times maybe getting it would have been maybe here, prior resistance to support, as it was breaking out of this. And this is a reason why, as you guys know, if you've been following me, that I've been long on Intel since 28ish, and I've been buying these dips. I bought actually some more here, I've been bought here, bought there. Why do I want to buy Intel up here, right? And so that's the same concept there. Same with the, you know, same with the Amazon. That I think Amazon, I think Amazon, obviously, there's a better chance Amazon to kind of recover. But what I like to see on some of these stocks like Amazon, you know what? Let's look at it. NVDA, Netflix, Google, Apple. I didn't have plan to do it, but let's look at it because I know you guys are interested. Amazon, obviously, you know, at these levels now we're below it, below these moving averages. But I think what I like to do would be do something like that. And you can see where we're finding support at 50%. What I'd like to see is Amazon actually getting into consolidation. That's what I like to see. Like we got a little bit of consolidation here. You can see right here. See, this is kind of what I like to see. This right there. That's what I like to see right here. And then once it breaks out of it, here, this is how you want to play it, guys. And with enough patience, you can have to play it on Amazon and start to be profitable. So you see that how this thing came down. This was back in 2014, and then we built that base, right? And then prior resistance you support, this is where you want to start accumulating shares. And then you hold that and you ride it, and as it starts to really thrive like that, you start closing out your shares. And here, I think good chance will be maybe this thing coming down and start consolidating. It doesn't mean it's going to happen like that, but that's what I'd like to see for me to start going long. NVIDIA, to be honest with you guys, oops, I'm not here. To be honest with you guys, it looks like VRX. You guys remember VRX when Bill Ackman like lost billions on that? But I don't know if I'm ever going to trade NVIDIA, but I think 113 and then start to consolidate maybe, but yeah, like what we got 50% here and 151. I don't know if it's gonna come all the way down, but I wouldn't be surprised. 113, 100, I'll be interested potentially. I'm not sure. And then start to consolidate. Only way I'm gonna go back in, I'll go long on NVIDIA will be if I start to see a consolidation. If this thing just goes down and goes straight up, then man, it could be just some crazy shenanigans. So, you know, not looking forward to going long on NVIDIA. Netflix though, I think some of these levels will be great. Buy level 247, 220, 25.75, and those are the levels I potentially look to go long here. Google actually did break below it, rising support, as you can see right there. And that's not the end of the world. It does it a lot, and just, you know, and okay, and then let's do a fib right there. You know what I like to do? Is there a gap area in that vicinity? Yeah, right there, right? There's a gap right there, which is coincident with my 50% fib, right? So that's the, yeah, that will be a good buy level if we do see it. Like 922 and 900 will be, that's what I would like look into. 1,000 area, I think a lot of people might be buying here. That's the prior resistance. That might be a level. But for me to go long, I want to see this thing going a little lower. But 1,000 area could be the support, but we got the rising option support there. So 922, 900-ish level I'll be thinking to buy. Apple, I recently got into it. It actually filled the gap here. And one of the things I liked about it is monthly chart of Apple, right? You go to monthly chart there. This is what you call prior resistance being new support. This is kind of a similar setup as you can see prior resistance becoming new support. I also call this potentially a rising pivot, right? So a lot of people chased it up here, and then they're, you know, market loves to you know, punish the chasers, and this gap has been filled, right? So then I think there's going to provide some cushion in that. So that's a level I actually did accumulate some positions, some longs here, 190, 193-ish level. So Apple's doing so much better than other, as far as chart is concerned, other large tech stocks, and especially like, you know, NVIDIA is the worst. You know, NVIDIA is the worst one. Let's look at Tesla, because I know a lot of you guys like to look at Tesla. Tesla's like bounced back, and you know, what you can see is we actually established pretty solid pivot here, horizontal pivot. I mean, that's pretty solid right there. 276, 253. If you can hold that, and there's a potential this thing could break on. We also have, you know, this rising uptrend support. It's a little bit of, there's a little bit of head fake there to the downside. You can see, right? That's what the market loves to do, right? That's a fake right there, right? Just right there. That was the trap, because a lot of people are drawing this, got below it, freaking out, just reverses right back up. So it looks more like a bullish setup on Tesla, actually. And the monthly stochastic actually just crossed. You go to here, you can see that it just crossed there. So when they do cross on the monthly, if you can stay crossed, they usually tend to go all the way up. So that's something that that's a good look in the more of a longer term perspective there. So that's everything for me. You guys have a wonderful weekend, and good luck trading next week.